Okay, we are live. I'm happy to have Dom from BANXA here today. He's the founder and chairman of this crypto company. And yeah, I'm very happy, Dom, to talk to you today. Nice to have you.
Lucas, thanks for having me on today.
Okay, so let's jump right into it. Can you tell us a little bit about your journey into crypto?
Yes, certainly. So just maybe before that, on a background basis, been involved in tech since mid-90s, listed a few companies on the Australian Stock Exchange and then ran a small fund and really got interested in crypto, really started with Bitcoin in 2013, found the technology and the potential utility or uses of it incredibly fascinating. And then 6 months later, we launched bitcoin.com.au, which is a website that sells crypto in Australia, which is actually still owned by BANXA today. So that's really and if we fast forward to today, BANXA is a payment service provider for the digital asset industry. We're like the Stripe or the PayPal, specifically for crypto to crypto exchanges and wallets out there. And I can certainly talk more about what that means and how that works. And we listed in January this year on the TSXV and the OTCQX in Frankfurt. And so yeah, definitely. And so we're just pretty new. Not a lot of people have heard about BANXA yet. We're the new kids on the block, and it's good to basically get some more exposure for the company and give investors an opportunity to invest into the whole crypto space without actually owning Bitcoin or Ethereum. Effectively, BANXA provides that avenue, like an equity style way of getting exposure to the sector. So hopefully, Lucas, I've answered your question.
Yeah, great. Thank you very much. Yeah, I mean, I did my first video about BANXA, I think in January. That was, of course, a good time in crypto when all went up, like Bitcoin and the BANXA stock. Since then, everything cooled down a little bit, but yeah, we know this happens in crypto. Um, yeah, I mean, when we're talking about BANXA, where are your locations? Do you have where are the employees? How many employees? Who is on the board? Can you elaborate a little bit about
Yes,
this?
certainly. There's about 100 people in the company, and given the nature of cryptos 24 by 7, unlike normal stock exchanges that go from morning to the afternoon, crypto never sleeps. So we have people all around the world. Our core base is Australia. As you can maybe tell, I've got an Australian accent living here in the Netherlands. We have a few offices here in Europe, as well as in Asia. So we've got people literally that follow the sun because we need to be able to do that. Albeit, I'd say a lot of the heavy lifting, the engineering is done out of our Australian base. Australia is very much known around the world for very skilled talent, and so in terms of the board. We got 3 other non-exec directors on the board, a guy called Jim Landau, Doron Cohen, and Matt Kane. And in fact, I've actually got a slide deck that I can sort of point to when answering certain questions. And so those 3 guys, between the 3 of them, have got over 50 years of public company and technology experience. And unfortunately, we're led by our CEO Holger Adians. As you can maybe tell, he's a German national living in Australia, running the high performance team, and as we like to say internally, he runs the company with German precision, and we're very fortunate to that Holger's running the business on a day-to-day basis. And one of the things, because I'm sure you'll be talking about the expansion of the company, and what we've really done over the last 6 months is very much built out the team, both from an operational and senior management perspective, and continue effectively ramping up capacity in the business because the business has grown, which meant new staff in support and on onboarding. And ultimately, what we want to do is just provide our customers with fanatical support. That's ultimately the name of the game. My view is if we make our customers happy, then it ultimately will flow down to our share price.
Okay, yeah, very interesting. Thank you. So, I mean, there are a lot of exchanges out there, there's competition out there. So what is the business model for BANXA, and how, what's the difference between BANXA and the competition which is out there?
Yeah. Maybe the best way to answer that question is this particular slide is to tell you about what BANXA does, and then how it's different to our competitors, and how it actually works. So just to maybe take a step back and provide some context around the industry. On one side of the value chain, you have the miners, the Hut 8s of the world, those companies that are very capital intensive because they need equipment and physical infrastructure, and they basically mine or stake coins. So that's one part of the value chain. On the other part of the value chain, you have the exchanges like Coinbase, Kraken, Binance, OKX, and wallets. And then in the middle are the payment service providers like BANXA that basically connect the existing fiat world, the US, Euro, dollar, Australian dollar, fiat world with the digital asset world being Bitcoin, Ethereum, and other coins. So I just wanted to provide that, let's call it, context to the industry and where we actually fit in. So in effect, what we do is we do four core things, and I will answer the question around our competitors. Firstly, we aggregate a whole series of global and local payment methods like MasterCard, Visa, and Apple Pay, and local in Canada being Interact in Canada, SEPA in Europe, Poly in Australia. So we basically then wrap that with our regulatory and compliance platform, because today, unlike when we got involved in the business in 2013, 2014, the whole industry is regulated, and regulation is a very important part of the piece, because these days you cannot operate without actually having appropriate licenses around the world, and we have quite a number of them. And then ultimately that is underpinned by our technology platform that manages, data pricing, payments, as well as the delivery of the coin. It's our homegrown technology. It's proprietary. And we basically, and that's where, the bulk of our engineering talent in Australia, ultimately builds and is responsible for that platform. So that's what we do. Then I call it, we wrap it up into an API and a widget, which is just another fancy name for a technical connection to global exchanges and wallets out in the marketplace. And so you may ask, how does that work? How does that actually fit in? So if you go to Edge Wallet and download Edge Wallet today, or you go onto Binance, you're in Canada and you're on Binance. When you log in and start, there's no money in the account. There's no Bitcoin, because you've come from the fiat world. And so you then click on a button called BANXA. We take you through an AML KYC process. Effectively, it's the same kind of compliance you get at a bank or a broking firm. You say, I want to buy $1,000 worth of Bitcoin with Interact. We complete that payment, and then we will deliver $1,000 worth of Bitcoin into your Binance account, ready for you to start trading, because a lot of these exchanges are crypto to crypto exchanges, or like in the case of Edge Wallet, it's a wallet, a non-custodial wallet. So that's what we do, and that's how it interfaces from a customer perspective. And you asked, what's the main difference between ourselves and our competitors? Our real focus is around local payment methods, and I'll tell you why. And tell you why, and I should say most of our competitors, they just do credit cards. So they mainly do global MasterCard, Visa type payment methods. So ultimately it comes down to the consumer. If you pay by a credit card, the fees are roughly 4 to 5%. It's not us, it's the industry. Credit card is just inherently expensive in this industry. While if you use Interact in Canada, it's pennies in the dollar, or SEPA in Europe, it's literally a couple of cents. And so if you're buying $100 or $500 worth of Bitcoin or crypto, you can put up with 4 or 5%. It's not that much in whole dollars. But if you're buying $1,000 or $10,000 worth of Bitcoin, you don't want to be paying 40 or 50, 4 or 5%. You want to pay pennies. Now, in order to be able to offer local payment methods like SEPA in Europe, Ideal in the Netherlands, you then need to have a local company, a local bank account, and most importantly, you need to be regulated globally. You need to have a license to operate in that territory. And that's kind of the key that effectively brings it all together. And just to give you context, we've got multiple licenses around the world that allow us to trade we've got a whole department that is just out there acquiring licenses around the world as well. And that is one of the major points of difference. And so the reason why most of our competitors don't do that is because it actually takes a lot more work and a lot more effort. And just to give you context, one of the last licenses we received was a license out of the Netherlands. That was a 12-month process, and it was obviously quite an expensive process as well. But ultimately, it's an asset that we're building for the company. We've gone through a similar process in Canada, Australia, and a number of other countries. And so that's also part of the value is the payments, our regulatory compliance platform, which is part people, part licenses, and part technology, and then our proprietary tech. So hopefully, Lucas, I've answered that question.
Yes, yeah, very, very good answer. Thank you. Yeah, and I also heard that you have different domains saved in your company, secured, different domain names. So this is
yes, yeah. And this kind of goes back to the, let's call it the legacy of the organization. When I was first talking about us getting involved in the space, we started with bitcoin.com.au. That's a website that allows Australians to basically easily buy Bitcoin. Because if you think it's complicated now, it was much, much more complicated in 2014. And so over the last few years, we've launched bitcoin.com.au, bitcoin.co.uk. These are all, let's call it B2C businesses, because you may think, why? The first thing that someone thinks about when they want to get into the space is Bitcoin. Bitcoin is kind of generic for digital assets. And so we own a big portfolio. What we've been doing today is some very basic SEO, drive customers to the website, and then BANXA, obviously as a payment service provider, processes all the payments. And we have what we believe to be one of the largest premium Bitcoin domain portfolios anywhere in the world. And what that means is, for example, we own bitcoin.ca for Canada, bitcoin.com.au in Australia, bitcoin.eu in Europe, bitcoin.co.in for India, Bitcoin Mexico, and there's a whole host of other countries. And so these are currently assets internally that have been underutilized. We are actually having some discussions at the board around how do we unlock and create shareholder value by ultimately, what is one of the largest domain portfolios, which is obviously with the couple of websites that we've already launched, generating positive income for the company. And so all I'll say, I can't say much more than that, other than watch your space.
Okay, yeah, very interesting. Thank you for this. So, Dom, what are the plans for the next 12 months for BANXA? So how do we get the stock up to new highs?
Yeah, first and foremost, just to answer that question, the business has had good, solid growth. One of the key ways that we communicate to the market how we're going, as well as internally, is TTV, total transaction value. So that's the dollar value of pipes through the system. And so in answering that question, right now, most of what we do are what we call fiat on-ramp. You go from US, Euro, Canadian into Bitcoin, Ethereum, USDT, and other coins. We've just turned on the fiat off-ramp, going Bitcoin, Ethereum to right now Australian dollars. We've been testing that out. It's working well. There's a regulatory compliance process. There's an extra technology process that we need to go through to be able to turn it on. And so over the next 6 months, we will turn that on for the rest of the world that we operate in. So you can go both fiat on-ramping and fiat off-ramping. We think, that should have an impact on our TTV and ultimately provide customers with more opportunity to both go in and out of the Bitcoin and the crypto space. And then what else are we going to do? We're just going to continue growing our B2B customer base. So we break down the business into a number of horizons. We use the McKinsey Horizon model. Horizon 1 today is doing more of what we've done over the last 6 months, which has basically seen this hyper growth. That is, continue growing our B2B customer base, expanding more local payment methods, because local payment methods are really important as the industry matures. Expanding in more coins. We do about a dozen coins to date. We're very shortly about to bring on another 40 or 50 coins. And then opportunities in DeFi and NFT. And I could literally have another session with you just talking about the opportunity in DeFi or decentralized finance or NFTs, which are non-fungible tokens, which are whole business models on their own that sit on top of the blockchain. And once again, companies like BANXA providing that interface between the fiat world, which we all live in, to the digital asset world that only a few percentage of people move in. So, and at the same time, let's not forget, going out there and communicating the story on the company. Because we are the new kids on the block, as they say. We've been listed for 6 months. And I mean, as you can see, this is just a high level comparison actually from, yesterday, which looked at the respective market caps. We have a market cap about 150 million Canadian. Other companies, they've been listed for longer than we have. But if you check our revenues out from the last quarter or even the last 9 months, our revenues and profits are actually more material than a number of these guys here. And they've got a much larger market cap. But we just put that down to it's going to take time. These guys have been around for years. They've had time to build networks and trust and relationship. And, we're going to continue on that journey.
Yeah, I think it always takes a little bit of time. But I think another good way to get more people into BANXA would be some kind of uplisting. You're listed right now in Canada. A lot of people with other companies like AD, for example, or Bitfunds or whatever, people were praying for this uplisting. It now happens. Okay. It was not that successful we expected, because right now it's a little bit, how would I say, a little bit consolidation. But what are the plans here for an uplisting?
Yeah, that's certainly on our roadmap. Once we've been listed on the TSXV for more than 12 months, which will be January 2022, anytime after that, we have the opportunity to uplist to NASDAQ. We actually already meet the minimum requirements. I think for us, BANXA ultimately belongs on NASDAQ. I won't make a commitment, will it be the first half or the second half, but it's the next logical step for the organization. And ultimately, there are major funds and institutional investors who can only buy NASDAQ stocks, where they can't buy a TSXV or an OTCQX type stock. So in that respect, I think it will just give us access to a wider range of investors. And the way that I look at this, I take a pragmatic and also a medium to long term view. And investors sometimes ask, what does that mean? I look at things 2-3 years out. I don't look 5 or 10 years out. I mean, I do, but you can't look too granular because technology is moving so quickly. They basically say a 1 year in the internet is like 7 years in the normal world, and I would say 1 year in the crypto world is like 11, 12 years in the normal world. It's actually going that fast. So when I say looking at 2 to 3 years, that's in my view the horizon that we need to be looking at for a company like this, particularly in a fast-growing technology space. And NASDAQ, in my view, is the next logical step. But we've got so much work to do today in continuing to build out the organization.
Yeah. Okay. That sounds great. There's a plan to go to NASDAQ, and I think that's very important. When we talk about growth of the company, right now it's all about growth. We have seen the chart. What is the most important KPI for you or for your company? How do you measure the growth of this company?
Yeah, good question. The way that we measure growth internally is our TTV, our total transaction value, because it's the one that will basically what is it? It's basically made up of customers, transaction volume, coins, payment methods, on-ramps and off-ramps. So all those things that we do will ultimately focus in and lead to total transaction value. The beauty, and if you ask me, why do I love the business? The reason I love this business is it is a highly scalable business model. What is sometimes called, it has a lot of leverage, a high degree of leverage. And what does that mean? Whether we're doing 200 million TTV in the March quarter, or we're doing 2 billion TTV in March 2022 or 2023, we've got roughly the same costs in running the business. Obviously, we need to add some more customer service people, but the technology does the heavy lifting. And this is why I'm, coming back to the question around, my view on this is it's a 2 or 3 year view, because I believe we can be doing 2 to 3 billion a quarter, if not higher. And then at those kinds of numbers, you'd expect the business to actually be highly profitable. And so that's where we harvest. Right now, any extra money that we make, we reinvest straight into the company. Like, that is the absolute objective, and that is the absolute right thing to do from a shareholder perspective in terms of building medium to long-term value.
Okay, so scalability with your model right now is very possible, I understand. So you can ramp it up very fast if the growth is there, with no big additional costs in development or so. Is this correct?
That's it. That's exactly it.
Yeah, I think that's a difference. For example, to mining companies, they always need a lot more electricity to mine more, and more hardware. So yeah, I think that's why these companies here are very interesting. They are focused on software. Yeah, I think the TTV, the total transaction value, yeah, it makes sense that this is the most important KPI. I think it's comparable to the mining profitability when we're talking about miners, when you have all the hash rate, the price, the difficulty, and all these things in one number. So that's when I look to miners, that's for me a very important number there. Okay, yeah, so the growth is big right now. I mean,
yep.
The prices of crypto are down right now compared to Q1. But as in crypto on-ramp or exchange, it does not always have a big effect to these companies, because there could be a lot of trading in these times when the prices are low. So what can you say about this?
I think that's a really interesting point. Companies like BANXA, payment service providers, we're not correlated to the price of Bitcoin. The number, so that's point number one. Point number two, the most important thing for the business is volatility, price volatility. The more volatility in Bitcoin and the other coins, the better it is for us. And we've proven this over the last 4 or 5 years of running the company. And so it doesn't matter if the price is going up or down. It's just we want it to basically go up and down in relatively big swings, which is what it's been doing, not all the time in the last 4 or 5 years, but a big chunk of the time. And so that's one of the things that I think it's our job as an organization is to communicate that to investors, for them to actually get an understanding if that's actually one of the key dynamics in the company. And the worst thing for us is, if Bitcoin was to go to 35K and stay there, to trade between 35 and 36K, for the next 2 months, that would not be good for us. It hasn't done that, and I don't think it's going to do that for a very, very long time. So, hallelujah to volatility. And just to sort of give you some context, given that we're talking about numbers, in the March quarter, we did just over 21 mil of revenue. That was made up of a combination of both agent and principal commission. I'm not going to basically get into talking about the accounting nuances. We've got full quarterly March MDA, as well as financials. And I think it's note 15. You can break down that particular revenue. But really, the more important number coming out of that is on an adjusted EBITDA or underlying EBITDA basis, we made just shy of $1 million of EBITDA profit, which it's a good result. It's good, but ultimately, we take any profit we make, we reinvest back into the company, because going back to that TTV, sometimes people say, what's the golden goose? The golden goose is doing 4, 5 billion, 10 billion a quarter. Like, that's the big fat hairy audacious goal, and that's what we need to be aiming for. So any profit that we make now, we reinvest back into the business, acquiring more customers, And then at some point we go into harvest mode. We've got over $25 million cash and cash equivalents in the bank. We've got no debt on the balance sheet. So we've got a really strong balance sheet to be able to execute all the things that we need to do. There's an Australian saying, I don't know if it translates to other part of the world, but you basically say head down, bum up, which basically means get on with the job. We know exactly what we need to do, and it's just now about execution.
Yeah, very good. Sounds very interesting. I mean, the revenue 21 million compared to quarters before. I mean, that's a huge growth. Then we have when we talk about financials, then we have the cost of sales. Can you talk about this? What's that kind of position? It's like 50 million. What are the costs of sales for your company?
Yeah, and this comes back to the nuances about the revenue recognition policy, and just kind of, as I say, peeling the onion. The way that we make revenue is in two ways. One is it's called an agency type agreement, whereby if you buy coin on Binance, by way of example, we will source the coin upstream and then we will send it directly to you into your wallet. And in that case, we only count for our commission, a small percentage, as revenue. So that's one revenue stream. The other revenue stream is what they call principal revenue. And this happens when, for example, if we get a coin and it's held in our wallet at our company, and we then, from that, our own wallet internally, we then send it out to the customer directly, because under accounting rules, and I don't want to bore people to death with accounting rules or nuances, is when we get that coin and then we hold it on our wallet, even if it's literally for 30 seconds or a minute, from an accounting perspective, it's actually counted as revenue. And so we have to count the dollar value of that particular coin and the corresponding cost of goods associated with that as well. So it gets very complicated, and this is a discussion that I have with our auditors all the time. Is I'd rather be all agent or all principal to make it really simple for investors. So the way for this is why I come back to what is the most important metric for the organization. The most important metric is our TTV. With the TTV, you can then say, okay, take 2%, take 2.5%, take 3% take rate or a percentage rate. That is ultimately when you take out all the nuances about revenue recognition policy and this, that, and the other. The next one is what's our take rate? It's going to be 2.5 or 2 to 2.5%, depending upon which analyst report you look at. And then everything else is, let's call it costs, like employee costs, offices, marketing, etc. And that's where you get your EBITDA. So that would be the best way for investors to effectively, let's call it back of the envelope, work out what we're doing. What we've also got on our website is there's a couple of research notes. One of the research companies has actually included a financial model in Excel that allows you to plug in your own assumptions, and then from there get your own DCF or EV type valuation. So I'd encourage any of those investors out there that love Excel is go to the website, have a look at a couple of the research reports on BANXA.com and download that Excel, and you can basically run your own financial modeling on the company.
Yeah, great. Thank you for this. I will do this. Okay, so let's talk about the partnerships. On BANXA, there was an announcement about bots. Can you tell us a little bit about this new partnership here?
Yeah, certainly. So, our strategy, just to come back and do a bit of a recap, we provide payment infrastructure that is regulated or compliant, because you need to be compliant and regulated these days, to global crypto-to-crypto exchanges and wallets. And many of these crypto-to-crypto exchanges or wallets allow you to basically trade BTC to ETH pair or BTC to USDT pair. They usually don't have a lot of on-ramps themselves. And this is where BANXA comes in, and we provide that payment infrastructure to all of these customers. The objective over the next little while is to continue expanding the number of companies that we have in the crypto space, And there are, I mean, if you only look at coin market cap and click on the exchanges, there are thousands of exchanges and wallets out there. So we've got about 70 customers, 70. The universe is in the thousands, and there's a list online where you can actually go and check them all out. We're going to target the top 500. So let's call it one group of customers, and I'll call them the crypto natives. The second would be the more traditional fintechs out in the marketplace, or neobanks who offer just, like a credit card or a debit card, like you get at a normal bank. There's many, many new challenger ones that have come up. Now, we're also talking to a number of those around how can BANXA provide them effectively the platform to give all of their customers access to crypto as well. And so there are effectively the crypto native group of customers, and then there are the non-crypto guys and companies that are wanting to move into this space. And we actually longer term see that as a big growth market. And so, BANXA will be there, be able to support that. But it's still very early days. They're only just starting to have these conversations. And then at the same time, we're also innovating our product. We've got our core product right now, which basically does all those core things that I talked about, like payments and the compliance aspect and the technology platform. We are just now about to unbundle our products into what we call microservices, API-based microservices. I know I'm talking too techie because, yes, I am a bit of a nerd, but in effect, what it will basically allow us to do is to basically bring on board some customers that we don't have, who don't want to use us for all four things, but they may want to use us for one, two, or three of those things. And so I won't say much more than that because that would be giving away too many trade secrets about what and how we're doing it. But suffice to say, there is a very strong degree of product innovation that's going on internally. I think we'll start seeing the fruits of that in calendar year 2022. And all I say is watch this space in regards to some well-known new customers coming on board over the next 6 to 12 months also.
Okay, interesting. You were talking about that you have like 25 million in cash on the balance sheet right now. I mean, when we go to mining stocks, I mean, there is a lot of dilution happening right now because they need always cash to fund the operation and to expand. What is BANXA? What is the strategy here to get capital from the market?
Well, we actually raised capital about 3 months ago. That's part of the reason we raised 15 million. We got over 25 million today. So in that respect, we've actually got a strong enough balance sheet. And at the same time, we made a small underlying EBITDA profit as well. So in that respect, we're not looking to go back to the market right now. My view is, very simple. We've got a plan. We've got the cash or the balance sheet to be able to allow us to execute that plan. And now it's just about, focusing and executing.
Okay. So I received a few questions from my follower there, and I want to ask you one or two about this. Hope you can answer this. He's one of these guys asked about the user base growth. So I think it's like the TTV. I mean, the chart goes up, so I think the users go up. Can you talk about the user growth?
Well, our customers, our business model is B2B to C. But the way that we look at it internally is our customers are the global exchanges, the global wallets in the marketplace. So we are effectively a B2B offering. We're not a consumer offering. And you may ask, well, what are the benefits of that? The benefits are that each one of these companies that you can see on the screen, they do the marketing. They spend the big marketing dollars in terms of bringing the customers to their website. And then once they're there, BANXA is integrated either through a widget or an API that allows those customers to then transact on the BANXA platform and convert their fiat into Bitcoin, Ethereum, or USDT. So that's, once again, another very important part of the model is the fact that, we are a business to business organization. And, even though it's not a SaaS, coming back because we were talking about SaaS and other companies in the space, but a payment service provider company like us at scale, and you only need to look at some of the big guys that are already listed. They're running at 30-40% EBITDA margins. That's what a PSP in the space at scale should actually make, which is why we're chasing the billions of dollars of TTV every quarter over the next couple of years. So hopefully I've answered that question there around users, because we don't look, our users are, well, our B2B customers, and they've got users, millions of them actually, hundreds of millions for all of them.
So yeah, the more Bs you add, the more customers you get. So when you have the top 500, that's, I think, a big step. So where do you see BANXA in 2 or 3 years with NASDAQ listing, for example? And about how do you see it in 2 or 3 years?
Yeah, that's a really good question, and I think at its core, and maybe just to sort of take a step back and try and paint the picture around the whole industry, because I think what BANXA is doing is really a fundamental part of the jigsaw puzzle that ultimately is creating a new financial system, one that is decentralized, one that is open and much more transparent than the current financial systems out there, and one that ultimately will give equal access. Whether you're in a high rise in New York, you're laying in the beach in Bali, or you're plowing the field in Rwanda, you will have access to the same tools, financial tools, and ability to earn interest or borrow or lend as the big banks and institutions in New York. And ultimately that is what we are as an industry is really creating a new world. And so, BANXA effectively providing the bridge between the fiat world and the digital asset world. We're ultimately the ones that are helping facilitate this movement. And coming back to your question around over the next 2 to 3 years, then, given that we will already have connections with global exchanges running the payments, which I see what I call layer one, because the payments are the core infrastructure. If you want to use the internet analogy, it's like the ISPs, the internet service providers. And if you remember the 90s, who made the money back then? It was the internet service providers. It was companies like Cisco that were doing all the physical routers, effectively the physical pipes that connected. And then what came after that was the layer 2 companies over the top, the Apples, the Googles, the Amazons that sat on top of the internet. So if you take that as an analogy and say payments, well, you've got mining, and payments are effectively layer 1 of that key infrastructure. And then over the top of that infrastructure, we lay layer 2 services like interest-bearing accounts, borrowing and lending, DeFi services, NFTs, et cetera. That's ultimately where BANXA is headed. Right now, we are absolutely focused on the layer 1 type infrastructure, because we are effectively laying it down between fiat and the crypto world. And we've got, frankly, we sometimes feel like we're just scratching the surface internally. We've got such a big and important job ahead of us. And so, in answering that question, I think ultimately it's providing customers of the global exchanges or fintechs or neobanks an ability to get exposure to the sector without having to be a technical genius and work out, what's my private key and how am I going to make yield? Am I going to stake? Am I going to yield farm? A lot of these things are just too complicated for, the 98% of people that have never experienced crypto. And that's part of our ethos, is just to make it really simple for consumers. And ultimately, I come back to our vision. Our vision is to onboard the masses.
Okay, yeah, that's a great plan, I think. I think it's a great company. So what are you guys want to do to, maybe to do more investor to more communication, that people get more knowledge about BANXA? What is the plan here?
Yeah, so we do have, we've engaged a number of IR groups, investor relation groups in the US and Canada and Europe, That's relatively recent. Now that I'm not going to say COVID's over, but the fact that particularly in Europe now, restrictions are being lifted. In fact, last week I was in Germany meeting with investors because we're listed on the Frankfurt Stock Exchange. In fact, next week I'm in Luxembourg and Switzerland, meeting up with a number of large institutions there. And my view is, I don't care what I'm a technologist. I'm a nerd, and I put up my hand, and I'll certainly agree to that. And I love Zoom and the ability for us to have this conversation. However, nothing replaces human contact, and particularly when you're dealing with investors that you've never met with before. The first contact, the ability to have a beer or just have a chat face to face, goes a very, very long way. And so now that COVID restrictions are being lifted, particularly in Europe as a starting point, and hopefully very soon in the US and Canada, will just mean I can jump on a plane more often, go out there and actually talk to investors and some of the major funds and just introduce them to the BANXA story. So that's what we're really starting to do. And I think over the 12 months, you will see an increased presence and hopefully, ultimately, if we continue with positive performance, also reflected in the share price as well.
Yeah. Okay. Yeah. We all hope this. So where do you see the crypto market is going in the short term or in the midterm?
Yeah, I get asked this question a lot. I think first and foremost, I'll take a step back. When I first was reading the various white papers and got involved in the space, for me, I actually didn't even worry about the price of Bitcoin at that point. Obviously, you look at it, but I never thought about it in that way. But the way that I looked at it was, this is a key part of infrastructure that is being built for a new financial system. And so, the journey that's happened, since 2013 to today, and that it continues to evolve, my view is it's only going to get bigger and bigger and bigger. The genie is out of the bottle. And I think China now for the fourth time has tried to ban it. You can't ban something that is decentralized. Sure, you can put structure and systems and regulation around it, undoubtedly, but you cannot ban it. The fact that governments around the world are now talking about launching their own digital currencies, I say absolutely fantastic. That will do wonders for the whole crypto space as more and more people have a digital wallet with central bank money. And still, BANXA, you can go from fiat money. It's still fiat money. It's kind of already digital. It's just running on the blockchain. It's just another form of it today. And so I think more and more over time, more things will actually get digital. And what do I think short term? Short term, it's going to be choppy. My view is it's a very reactive market, and this is why me personally, I'm not a trader. I make long-term investments. You ask, what do I hold? I hold, Bitcoin, Ethereum, gold, and silver. That's my investment. And I'm not going to even start talking about the hyperinflation that we're just about to go through over the next 2 years. You can't print 30, you can't add 30, 40% to your money supply anywhere around the world without it having impact on inflation, whether it comes up in the formal CPI numbers or in the price of goods that people are actually seeing. I think people kind of wake up to this fact. So because of that, there's this macro factor. There's the building out this effectively a new financial system. Long term, my view is this is the place to be. And I was around in the .com days. This reminds me of 1997. 1997. So Amazon was just born. Google, Facebook, Uber, Netflix, they weren't even born yet, not even for 10, 15 years. So we are still that early in the development of the whole ecosystem. And so investors, my view is if they take a long-term horizon, then companies like BANXA, those that are building the key foundational infrastructure, are the ones that are going to be able to prosper, at least that first wave. And we're still so early in the development of the whole ecosystem. Short term, Elon Musk tweets something, it goes up 10%. He tweets something else, it goes down 10%. It's just very, very reactive. And I just personally, I watch it. I kind of, for me, it's a soap opera, but I look at the long game. What are we here for? There's a real mission around what we're doing and the whole industry is doing. And BANXA, in my view, is playing an absolute pivotal role in making that happen.
Okay, so yeah, that was a great statement, I think. Yeah, BANXA, very interesting company in my opinion. I'm considering an investment in this company. I know that a lot of my followers are already invested into this company. So yeah, I mean 45 minutes. So I was planning 30 minutes, but yeah, 15 minutes more. Thank you very much for this. Do you want to add
Pleasure.
anything?
Just really, I guess, in summary, from an investor, and I'll actually say two things. For those investors out there that haven't actually gone and bought Bitcoin or Ethereum or downloaded a wallet, all I'll say to them is go out there and just do it purely from a self-learning perspective. And my views, once you download a wallet and buy yourself even $100 worth of Bitcoin, and then get your friend, your mate, to do the same, and you send him Bitcoin, and just say, he can be next door to you on the other side of the world. Just do that, and you just kind of that will make you think, I've just sent something of value to another person. It's happened almost instantaneously. It hasn't required a third party person. And that kind of like will be an aha moment for a lot of people. And maybe at another point in time we can talk about DeFi and NFTs. So I'd say definitely go and research that. But just kind of in wrapping it up, because I'm just conscious of the time, is if you believe the hypothesis that Bitcoin, crypto, and the whole digital asset system is only going to continue growing, then companies like BANXA that are ultimately providing that layer one payment infrastructure, which is foundational, will be the ones that, in my view, will prosper as part of that. And really just go out there and just buy something yourself, download a wallet, test it, suck it and see, as they say.
Yeah, I think that's then the magic when you see it finally works. Yeah, you have to do it. Okay, so I think we're done. Thank you very much for this. I will stop the recording here, and then we can talk
Thank you.
a minute more. So yeah, thank you very much, Tom, for this interview. And yeah, we will see us again, I think.
Thank you.